Crypto is still one of the most debated investments in 2026. Some people believe it's the future of money, while others think it's too risky and unpredictable. So what should Canadians actually do? Welcome back to Canadian Wealth Lab. In this video, we're breaking down crypto in the simplest way possible. What it is, why it matters, the real risks, and how it fits into your financial plan. No hype, no confusion, just clarity. Let's start with the basics. Cryptocurrency is digital money that runs on blockchain technology. A blockchain is a decentralized system that records transactions across many computers instead of one central authority like a bank. This means no single organization controls it. That's what makes crypto different. But here's what really matters. It's not about the technology. It's about how people use it and the value they believe it has. Now, even though there are thousands of cryptocurrencies, most of the market still revolves around two main assets. The first is Bitcoin. Bitcoin is often called digital gold. It has a fixed supply of 21 million coins, which creates scarcity. Because of that, many investors see Bitcoin as a long-term store of value, especially during times of inflation or economic uncertainty. The second is Ethereum. Ethereum is very different. It's not just digital money, it's a platform. Developers use it to build apps, financial tools, and smart contracts that run automatically without banks or intermediaries. If Bitcoin is digital gold, Ethereum is the infrastructure behind a new digital economy. So why are Canadians still interested in crypto in 2026? There are a few key reasons. First, inflation. Many Canadians feel like their money doesn't go as far as it used to. Second, traditional investing. Stocks and real estate are solid, but they often take time to grow. Some investors are looking for faster or higher growth opportunities. Third, global adoption. Large companies, banks, and even governments are exploring blockchain and digital assets. This has made crypto feel more legitimate than before. But here's where most people get it wrong. Interest does not mean safety. Crypto is extremely volatile. Prices can go up quickly, but they can also drop just as fast. And most beginners are not prepared for that. They buy when prices are rising and panic when prices fall. That emotional cycle is where most losses happen, not because crypto is impossible, but because people react emotionally. There are also real risks you need to understand. Regulations in Canada are still evolving. Not all platforms are equally safe, and many cryptocurrencies fail over time. So, this is not guaranteed money. It is high-risk investing. Now, the question becomes, how should beginners approach it? The answer is simple. Start small. You don't need thousands of dollars. Even $50 to $200 is enough to begin. Focus on major assets first. That means sticking with Bitcoin and Ethereum. Avoid chasing random coins or trends you see online. A smart strategy many investors use is dollar cost averaging. That means investing small amounts over time instead of all at once. This reduces risk and removes emotional decision-making. And most importantly, never invest money you cannot afford to lose. Crypto should never affect your rent, bills, or financial stability. Now let's talk about where crypto fits in a Canadian financial plan. Before crypto, you should build your foundation. The TFSA is one of the most powerful tools in Canada for tax-free investing. The RRSP is designed for long-term retirement savings. These are your core financial tools. Crypto is not a replacement for them. It is a small, optional part of your portfolio, not your foundation, not your main strategy, just exposure. The biggest difference between successful investors and unsuccessful ones is mindset. Successful investors don't chase hype. They don't panic when markets drop. They focus on long-term strategy and discipline. Crypto is not a shortcut to wealth. It is not guaranteed, and it is not stable, but it is also not irrelevant. It is an evolving part of the financial system that may continue to grow over time. So should Canadians invest in crypto in 2026? The answer is simple. Only if you understand the risks, start small, and treat it as part of a bigger financial plan. Because in investing, survival matters more than speed, and discipline will always matter more than hype. If you want simple investing tips for Canadians, subscribe to Canadian Wealth Lab.